Hey, what is up, everybody? We're back again with the CBD Business Accelerator. I got a special guest, one of my favorite new friends. She's my CFO, so you know that she's good. Her name is Kara Janowsky. Thanks, Kara, for joining us.
Hey, Matt. Yeah, thank you so much for having me. I'm really excited.
Me too. I've been waiting, rearing to go to talk about this because obviously finances, if you don't have a business, if you don't know your numbers, like how the prophet Marcus Lemonis says, if you don't know your numbers, you don't have a business, period. Like,
Yeah. And it's one of the biggest things we see in this industry is that people are so passion driven and so excited to be in this space that sometimes they forget about the importance of managing their financial data and using their financial information to make decisions.
oh, 100%. Like I can remember when I had my CBD brand, sometimes you just, when you're building a new company, you get lost in all these minutia and day-to-day things that you have to do that you forget about the money and the profits sometimes.
Yeah.
I've seen that on that show, The Profit, like so many of the business owners don't know their numbers and you're like, wow. So having somebody like you on the team is huge because then like for me, you're my CFO and it just takes the worries off of me, even though I can see my numbers at any time because you show me the sheets and everything. And so it's like, I know somebody's working on that. I don't have to think about that anymore. And it takes that big load off of my shoulders. So thanks
Yeah.
for
Yeah.
helping me. Uh,
Yeah. Well, we,
and
we love to do it because sometimes people are just also intimidated by it and they just kind of wait and they hope for the best. And, there's a big stress factor in managing money from the beginning. So that's why we love to do what we do so that we can turn it into a pleasant experience for people.
yeah, for sure. Um, like, and so just so people know, your company is Sonder Accounting and Consulting, and you call yourself, I like this, it's a hemp profit strategist. I love
Yeah.
that. So,
Yeah. I mean, there are millions of accountants probably out there, hundreds of thousands to be sure. And so many of them are so compliance focused and just, yes, compliance is incredibly important and being ready for tax time. But we take it to that next step, which is helping people to understand their data to move towards profit, especially in our industry. People are sometimes investing livelihoods into their CBD brands, and we want to make sure that that's turning profit for them so that they can, at the very least, continue to do what they're so passionate about doing and hopefully provide for their family and not have to stress on that front. So we're very much focused on designing financial systems around a profit focus.
that's beautiful. But it's all about profits. And
Yeah.
what are some of the common financial mistakes made by CBD and hemp business owners that you could touch on?
Yeah, I actually wrote a book about that. It's called The 10 Biggest Financial Mistakes That CBD Business Owners Make or Hemp Business Owners Make. One of the things that people do most often when they have a good year is they fail to make their quarterly estimated tax payments. And that comes with steep penalties. Not to mention the burden of all of that hitting at once at the end of the year. So I think that's one of the major things, and that applies to every industry. So you have got to stay on top of your profit. Another thing that people do very commonly that we're going to talk about here today is miscalculating the value of their inventory. So very often we see folks using the retail value of their inventory to report their inventory at tax time. And that is almost always not the best way. Now, the IRS accepts it, but it's definitely not tax advantageous.
Interesting. And what makes you different from other accountants? And you kind of touched on some of that, but like, what do you think is different than most accountants that working with you?
Yeah, I love this profession. I love working with accountants across the board, and we have a dozen tax preparer partners ourselves. But what makes us different is our focus on this industry and our in-depth understanding of this space. So I've been in cannabis since about 2009 and seen a couple of different facets of the space. And I am really here for my passion for helping this industry succeed. Hemp is 80% of our clients are in the hemp space, and we've served this industry for the last 4 years. So we've seen a lot of the mistakes that are specific to this industry. We help our clients navigate the problems that are specific to this space, such as merchant processing or banking issues, inventory management, etc., in a way that another accountant might not be familiar with or even aware of.
Oh yeah, they definitely wouldn't know about those matters in the CBD world. It's such a niche world, as you know, and so yeah, that's huge value that you can bring to the clients. And
Mhm.
so yeah, you want to jump into your slides that you have prepared? I'm excited. I got my pen ready to take notes here.
Okay, cool. Yes, I'm going to share my screen. Bear with me while I pull it up here.
All right.
There we
There
go.
you
Can
go.
you see that?
Yeah, it looks good.
Okay, great. So, the purpose of this is to talk about everything that a CBD brand should be doing to prepare for tax time. Now, obviously, if you're listening to this, you might have an accountant, you might have a bookkeeper, you might be totally doing it on your own and using TurboTax or something like that to file, which, by the way, reconsider that. But, this is going to go over the basics of what you should be doing, whether that's yourself or someone that you work with. So here are the things that we're going to talk about: evaluating your inventory correctly and how to do that, what you need to do to wrap up the accounting at the end of the year, how to file your 1099s, specifically some of the mistakes that we see happening, and business gifting. We're entering holiday season. There's a few nuances to that we'll talk about. So what I want to say, just as we kind of dive in, is please don't consider this tax advice. I can't give anyone individual tax advice without knowing your circumstance and having you as a client. So this is high-level stuff that should apply to you. But if there's any questions, make sure to bring that to your tax professional. Okay, so inventory valuation. We're starting out with one of the most complicated concepts that we face in this space. And we're going to specifically look at the cost method. So I mentioned retail method versus cost method. And I just want to start by kind of explaining the difference there. So retail method is the retail price that you sell your products at, right? So when you count your inventory at the end of the year, if you assign the retail price as the value, that's called the retail method. The alternative is the cost method. And we're specifically talking about inventory valuation methods here. This is separate from your accounting method, just so you know. So the cost method is when you actually analyze the direct expenses that go into developing and production of your product. So let's talk about this process. The first thing you need to do is count your inventory on 12/31. You want to be as close to 12/31 as possible. And you want to count everything from your completed products, your packaging, your labeling inventory, any work in process as well, products that are in the middle of the manufacturing cycle, as well as the raw ingredients that you have on hand to produce future batches. Okay, so you want to start by counting all of those items. And particularly, I recommend, if you're unsure if something should be included, to count it and then ask questions later. Ask your accountants later, because it's better to have that number and be able to make the decision when you need to. The next thing is to summarize the direct expenses to determine the cost of production. So this is how we're assigning a value to all of those counts that you just done. So typically this is going to be your cost of goods. So your raw materials or ingredients that are going in, your bottles, your labels, everything like that. Even the utilities that are directly corresponding to your manufacturing process. That's called your overhead. Same thing with the labor, the direct labor involved in the production of your process, of your product, sorry. So you want to summarize these costs and then take it a step further to calculate the average cost to produce each of your products. So if you have, let's say, a 1,500 milligram tincture and a 3,000 milligram tincture, you're going to want to apply those costs to each end product. That'll give you a value, the cost value of every product that you're making, that should correspond to your inventory valuation. That's one of the most high-level concepts. So I did create a worksheet. If you're watching and you wanted to go check this worksheet out, we're going to be improving it over the course of the next couple of months, but it's a great starting point to help you understand that calculation process. So feel free to check that out if you're interested. The final piece of the inventory valuation process is to adjust your inventory in your accounting records. Now, if you have an accountant, this is definitely something that I would let them do or ask them to support you in doing, because there are a couple of different ways that it could be done. If you don't have an accountant and you only use a tax preparer, start by providing them with your inventory valuation amount, and they'll help you understand how you should report that in your books. So that's inventory valuation. Matt, do you have any questions I could talk about with that?
Let me see here. Oh no, people just said hello. I was like the audience. If you have any questions as you're watching this, people fire them in the chat. But I don't have any so far. I'm just watching along. But yeah, people fire the questions in the chat and we'll answer those as we go.
Cool. I just wanted to check in. Awesome.
Okay, great. I'm watching.
Yeah. I'd love to answer any questions. Inventory valuation is one of those concepts that we see people reporting the retail value. And, it sounds like a complicated calculation, but it's worth the effort to do, because what happens when you use the cost method is you're actually able to reduce the value of your inventory according to the books to the cost value, right? And that allows you to deduct more of your expenses rather than reporting them as an inventory on hand. So we'll skip to the next topic. And if any questions come up, we can circle back.
Oh,
so
real quick, sorry to interrupt. So that would, if you were able to do it that way, the way you just described, that could save somebody thousands of dollars, right?
Absolutely. Absolutely.
So
yeah,
that's huge.
Yeah.
Somebody commented here, I'm not sure how to do inventory in QuickBooks, so I enter a value entry at the end of the year.
Yes, QuickBooks inventory functionality needs to be maintained on, nearly a weekly basis.
Wow.
It ties in directly with your sales if you have that integrated. And that's where you can see some degree of automation in the tracking of your inventory. But the reality is there are fluctuations to inventory that it can never catch. So what you're doing is something that a lot of folks commonly do, which is kind of managing it outside and then integrating it at the end of the year.
Gotcha. Okay. Sorry to interrupt you there, but I thought that was good. Okay. I'll be lurking.
Yeah, no, that was a great point. Definitely worth mentioning. The QuickBooks inventory component does work. It just takes a bit to get it set up appropriately and managed. Yeah. Okay. So year-end accounting. We're going to talk about the high level things that you should make sure you're doing. A lot of this happens throughout the year. So this is kind of a checklist that you should consider as we approach 12/31 and tax time. So financial docs, right? You need to have your statements, receipts, and W-9 forms from any contractors that you've worked with. We're going to talk about W-9s a little bit more here shortly. But for now, I wanted to touch on receipts. So the IRS does require you to maintain receipts for all of the business-related purchases that you have. You can keep those as a digital file. You don't have to keep the paper. But if you like paper, that's fine too. And for the most part, you can just file those away and make sure that you have them in case you're audited in the future. Now, the one exception to this is receipts that are related to meals and entertainment, specifically meals now. You need to write on those receipts the business purpose of the meal and who you met with. So that's kind of an exception. Now, if you don't have a receipt for a given item, perhaps you weren't given one or you weren't thinking and you crumpled it away, don't panic. There is case law from the IRS that has demonstrated that statements may be accepted. Now, be very careful with this. I wouldn't recommend relying on your bank statement as evidence. But if you're at a point where that's the only evidence that you have, it can be supportive. The next thing that you want to do is enter and reconcile the activity in your books. Hopefully you use an accounting system like QuickBooks or Xero or NetSuite or Accounting Suite. And so if you do, you should be familiar with this process. And I just wanted to mention the reconciliation is one of the most important concepts of your accounting software. A lot of people think all they need to do is enter the data and kind of move on. But reconciliation is when you actually compare the activity that you've already entered in the books to what's on your bank statements. So you're kind of going to go line by line and verify that there are no duplicates, there's no transactions missing, or anything like that to ensure you're reporting your expenses accurately. And you may be doing this throughout the year, monthly, which is excellent. So this is just 12/31. You've got to catch it up if there's anything been missed. This is a note about outgoing checks that clear after 12/31. So checks are reported as of the date that you write the check, right? So if you pay an independent contractor on 12/15, and that's for work done in December, but let's say they just, for some reason, haven't cashed that check as of 12/31, you can still report this on your financials and your tax return. Okay, so you can do this by making a special entry in your accounting to record that the check is going to be clearing and should have cleared in December. So I always recommend kind of taking a record of anybody that you pay in December and making sure that those checks either clear or are recorded. The next item you'll want to do is consolidate your estimated income tax payments. If you've been making quarterly payments to the federal government or to your state government, you want to just collect that into a nice little list for your tax preparer to ensure that those aren't missed in the tax return. If they are missed, it could result in an overpayment, and hopefully the IRS will catch it and notify you and therefore refund it, but that can take months and months and months. So consolidating your payments just as a list, providing that to your tax preparer will help prevent that. Accounting for contrabank or outside of the bank transactions. This is things like your mileage and home office. So in a little bit, we're going to talk about a mileage app that I recommend, but the core is that the IRS requires a contemporaneous mileage log. That means that you should be recording your mileage on no less than a monthly basis. So if you're driving to meet with a business partner, you'll want to track that mileage and keep a log so that at the end of the year, you can claim that on your taxes. And of course, the other part is the home office. If you maintain a home office, you should calculate the square footage of your entire home or entire apartment, and then also the square footage that is explicitly and exclusively designated as office space. Now, some people may have just their kitchen table that they're working at, and unfortunately, the IRS won't accept that as a home office deduction. What is accepted is spaces that are clearly dedicated. Now, the IRS doesn't necessarily say this, but I always recommend documenting your space by taking a photo of your office and retaining that in your records, especially if you move, so that you just have a physical evidence of what you claimed as your home office. The next step, if you have payroll, is to review it for missed payments. So if you're processing payroll on a biweekly basis, you just want to check to make sure that every single paycheck was processed in your payroll system and that taxes were withheld and paid or remitted as appropriate. If you find that you had missed one earlier in the year, you definitely want to process that as soon as possible. Even within the same tax year, it's possible that there can be penalties and interest if payroll taxes are paid after the quarter that they're due. So keep your eye on that throughout the year and definitely make sure you're reconciling that at the end of each year. Which ties really well into this last step. If you are an S corporation, you may be issuing your owner payroll, your shareholder payroll at the end of the year. So S corporations have the ability to pay all of their estimated income tax for the individual via their W-2. This is a fairly complicated tax matter you should discuss with your accountant, but the core is to make sure that you are issuing that final W-2 before the end of the year. You might want to check with your bank with the 12/31 holiday. You know, some banks have a 12/27 deadline several days in advance. So that's the gist for the year-end accounting process. Have any questions popped up in the chat?
Nope.
Okay, cool.
Yeah, just somebody asking how many people use QuickBooks for their inventory. So that's for the other people watching.
Sure, totally fair. Yeah. Okay, great. So we'll continue on. The next piece is talking about gifts. So if you are in the spirit of giving this holiday season, you might be considering gifting to your employees, to your business partners or colleagues, etc. And there are some strict rules surrounding gifting. So the first thing is this $25 limit per person. Now, I think that makes us seem really cheap, right? If we're limiting our gifts to $25 per person. So the point is that the IRS does restrict it, that you can only give this limit per person per year. Specifically, let's look at company branded gifts. So let's say throughout the year, you may have company water bottles that you're giving out at trade shows or as appropriate. Technically, if these are gifted as a gift and the value is over $4, they still contribute to this $25 limit per person. It's really unfortunate. If it's under that $4, the IRS calls it just a marketing expense. It's not really a concern for gifts. The other thing about gifts is the record-keeping requirement. So the IRS requires you to maintain a log of who receives these gifts and the dollar value of the gifts that you've sent. So the record keeping is one of the ways that we can sort of maximize this limit per person. So let's use an example. If you work with an accounting firm that you'd like to kind of thank for their excellent service throughout the year, you can choose to give them, let's say, a gift of a bottle of wine that's $60. You can choose to give that to the entire accounting team. And you can list out the members of the accounting team that you anticipate and intend for that gift to be shared with. It's not really on you who walks home with that bottle of wine. So in that way, you're able to gift to teams and sort of maximize your gift giving potential.
Oh,
Okay.
real quick, what if it's cash?
Yeah, great question. And that also, I wanted to discuss employee gifts. So great question. Cash is typically going to be recorded. If it's an employee, any gift to them has to be reported as income. It is taxed as income. And it's possible that it would be taxed as a supplemental wage. Okay?
Oh, well, even if it's a gift?
Yes.
That's crazy.
Yes. I'm so glad you asked this question, because often folks are giving bonuses at the end of the year to their team, right? So the only way that you can get around that is to give the money personally from one individual to another. And that way it's not a deductible business expense, right?
Oh, yeah, exactly. You can't do, it's just a gift that way, like cash. And Sanchia, one of our members, asked, is this the same rule as gifting products to customers and or rescues? She works with dogs, rescue dogs. So.
Yeah, great question. Gifting products, it really depends on the way that you are approaching that. If it's truly a gift, what I would do is record that as the cost value of inventory and treat it as a marketing expense rather than a gift. Because
like a sample.
Yeah, just like a sample. That is, the way that I would approach it personally. If you're putting together some significant gift baskets, then it would apply to this.
Got it. Okay. Thank you for that, Kara.
Yeah. Yes. And, I don't know when you would necessarily give cash to an external partner, but if you were to give cash to an external partner, I can't really think of a way that would be omitted from a 1099. It would have to be included in their 1099 reporting, and therefore they would need to report that as income on their end still. So gift giving is difficult in the business world for sure.
Gotcha. Okay. And Sanchia said thank you.
Yeah, of course. Cool. So, these are 3 useful tools that I recommend. Typically, you'll want to consider them for the start of a new year. So as we go into 2021, think about if this is going to be relevant for you. Mile IQ is a very affordable app that goes on your phone that tracks your miles as you drive. So every single time you get in the car, it's capturing that drive, it's recording it contemporaneously like the IRS requires. And all you have to do is swipe left or right, business or personal. If it's business, then you have the option to record the information that they require, such as what was the business purpose, right? Mile IQ is only, right now, I think it's $5.99 a month. If you're somebody who does a lot of drives, perhaps you're distributing to stores, definitely recommend this tool, because what we find when people use their calendar is they're almost always missing drives and therefore missing deductions. The next one I'm not going to talk too much about, which is QuickBooks. We are a QuickBooks accounting firm. We love QuickBooks for most small businesses. Now, if your CBD brand is starting to exceed or approach a $10 million per year revenue, you may start to outgrow the capabilities of QuickBooks Online. But the reality is that QuickBooks is very adequate up to that $10 million per year mark. If it's managed appropriately, you can do everything from inventory to invoicing for your wholesale. Everything that you need can be done there. Other options for accounting software, just to share with you guys, Accounting Suite, I have heard is very friendly with our industry. I do not know whether or not they offer payments processing. I would anticipate no. NetSuite is also used for a more advanced CBD business that has significant ERP, which is Enterprise Resource Planning needs. So NetSuite sort of integrates the accounting with the resource management component. For the smaller businesses, Xero is another option that a lot of folks like because it presents the information in a very easy to understand manner. And Zoho Books is sort of the most entry level. If you already have an established business, those two options, Xero and Zoho, would be, probably not ideal for you. And the third is Gusto. If you run payroll or you're starting to run payroll, Gusto is a very accessible payroll application. It's not like ADP, right? Or those other major companies where, you don't really have an understanding of what's happening on the back end. Gusto provides the platform for you to pay your employees, and it's very intuitive. So typically they're collecting and remitting all of your payroll taxes for you at the time of payroll. So you don't have to worry about being surprised by the bill at the end of the quarter. And it's very intuitive. If you can get through kind of the setup of your employer accounts with the state and the federal government, Gusto is incredibly intuitive. Okay. So next, we're going to talk about filing 1099s, okay? And I'm specifically going to focus on some of the mistakes that people make most often. So let's dive in. The first thing is collecting all W-9s. Some people would say, when they reach out to their contractor, the contractor might say, oh, we're a C Corp, so we don't have to provide that. I would insist on retrieving that form from all of your independent contractors, regardless of their entity type, because the form is what demonstrates that entity type to you, okay? The W-9 also serves as an additional sort of piece of evidence for your relationship with that contractor. So collect all of them, regardless of whether they'll receive a 1099. International contractors will provide a form W-8-BEN or W-8-BENE. And the difference is individuals will provide the BEN and international businesses should provide the BENE. Typically, the BEN is the most common form that we see. This just provides evidence that your overseas contractor is not susceptible to income tax here in the U.S. Therefore, you don't need to give them a 1099. Now, when you're actually filling out the 1099 form, you should skip or omit payments that are made via credit card or PayPal. That sounds weird, right? Probably a good portion of your payments are made via credit card in these days. But the IRS requires the credit card companies and PayPal to issue their own 1099s for anybody who receives payments through their platforms. So you do not need to report those on the 1099s that your company files. Okay. Now, people always ask me about Zelle. Zelle is supposed to be person to person. Zelle does not file 1099s on behalf of your payments, so you do need to report payments made with Zelle. Basically, it's just PayPal and credit cards. Okay. Now, the final piece is that the IRS does require you to issue a statement of payments. I don't know if I've ever seen one of these come with a 1099 that I've received. So the statement of payments is just what it sounds. It's a list of the payment records for what you have paid the contractor. Typically, I recommend providing this a couple of weeks before you issue the 1099, just to give the contractor an opportunity to review it and point out anything that they think is a mistake. I also recommend leaving the credit card and PayPal payments on this list, but specifically identifying them as not reported on the 1099. Right, this helps clear up any discrepancies they might see. So that's it for 1099 filing. Just to close out that concept, I'll mention, 1099s are due by January 31st. Any contractor that you pay over $600 to must receive this form unless they are a C Corp. Okay. That is the bulk of what I had to go over today. I do want to share, Matt, if it's okay with you to share a listener promo.
Oh, yeah.
Okay, cool. So, any questions? We've kind of answered them throughout. Any questions?
No new ones have popped up, but if you have them, people fire away.
Cool. Okay, we'll check back before we close out. But, if you feel overwhelmed by closing out your accounting, if you want support as you go into tax season, if you want to reach out to me, mention you saw me on this live, we're going to offer a 5% discount on a full 2020 accounting cleanup. So if you've kind of, been focused on revenue generation and haven't really touched your QuickBooks in 6 months, I'm happy to offer this discount because, we appreciate Matt bringing us on here. So.
Thank you. That's huge. And I have been in that situation where I had to have somebody clean up my accounting. So I'm sure a lot of you watching have that same issue. So there's Kara's contact info, and you should definitely reach out to her. And she's great, people. Like I said, she's my CFO. She's helped me a lot, and we're just getting it started. We've been working together, I think, like 4 months now or so, and it's been great. And it's just, like I said, the weight of, oh man, what am I going to have to do with taxes and all that is taken off of me now. So it just feels great. So thank you for everything. And I'm looking forward to my year-end review with you on Friday.
Yeah, I'm really excited. I have some really good information for you, and excited to take it to the next level and really help you with your cash flow management.
Yeah, for sure. And so thank you for taking the time with us, Kara. And I'm sure we'll have you back on to talk about some new tidbits. But I mean, the information you gave today was golden. I mean, people, if you just implement some of the things that Kara mentioned, you could save thousands of dollars. And somebody commented, thank you for the insight. Yeah, that was great. So we appreciate you.
Yeah, so glad to help. And if anybody wants a copy of that presentation, I'm more than happy to provide it.
Oh, that's great. And then how can they get your ebook that you wrote?
Yeah, it's at 10mistakes.sonderaccounting.com.
Perfect. Easy.
Yeah.
SONDER, people. So yeah, and if they have any questions, they can reach out to you through the contact information that you left, or reach out to me if you have any issues reaching out to Kara for any reason. I'll connect you, and then we'll take it from there. And we will definitely be back again soon. And Terry said, thanks, Kara and Matt. Thank you, Terry, for watching. And we'll be back again tomorrow with Thomas Oxley, who's an SEO expert. He does SEO for McDonald's, Coca-Cola, and some massive CBD brands as well. So cool. We'll be jumping into that tomorrow morning at 9 a.m. Pacific time, people. So check us out then in the CBD Business Accelerator. And once again, thanks very much for your time, Kara. I know you're in the busy season for you right now.
It's getting started for sure.
So I appreciate your time.
Yeah, thanks, Matt. It's great to be here.
Okay, I'll talk to you on Friday.
All right, bye.
Bye, everybody.